Good morning, good afternoon, good evening, depending on where you are in this world. This is Hejin Lee with a morning update for Bitcoin. Today I'm just going to start with a little bit of a longer term perspective. As you can see, I've already drawn out the Fibonacci level and labeled the 1, 2, 3, 4, 5 very clear and very distinct Elliott wave pattern. And here you can see the subwaves of 3 as 1, 2, 3, 4, 5, and the subwaves of 5 or 3 as 1, 2, 3, 4, 5. Very crisp and well defined. So if the impulse was so well defined and it didn't really go vertical here, which is good. In other words, it wasn't really out of control. So it was very controlled. Only vertical really the section is about in the part of the wave 3, which makes sense because usually wave 3 is the most extended. So here, after wave 5, there is a requisite correction. And at the level of Fibonacci, it hasn't really made it down to the 0.618 Fibonacci zone. And what's probably going on is that this cluster of support is holding up the price, which is currently bouncing off of and has been bouncing off the same support here twice, and each time getting deeper but narrower at the same time. So ideally, it'll be nice to have it go down to 0.618. However, it's not required. It did already hit the 0.5, 0.618 makes sense. Notice how these went deeper, deeper, but narrower. Now yesterday, I pointed out a downward pointing wedge pattern. And from this pattern, price has broken out. Beautiful. However, I notice that there's a bigger pattern that's overarching all of that, and that this wedge is embedded within that. And that is a much bigger wedge, like this. I think this is beautiful. I think this is far more reliable as representing the whole correction instead of that small baby one. So if this is the bigger wedge, okay, then how would this wedge be counted if it starts from the top? The way it will be counted will be A, B, C, D, and E, just like that. Let me make it bigger and zoom in. There you go. So if we have, let me make this, instead of purple, make it red. Since it is a correction, get rid of the lines so that it doesn't hide the prices. There you go. So if I have A, B, C, D, E, and we are at D, the projection then will be that we will probably go to E. And that again still brings us to the 77, to maybe a little lower, closer to the apex, the better. So I would say 75, 7600. Okay. However, let's look at the waves that have been made so far, the A, B, C, and D. Elliott wave states that when you label it as A, B, C, D, E, it's a 3, 3, 3, 3, 3 event of subwaves. So let's go to the ABC markings, make this blue, and label the subwaves of this red A. It'll be A, B, C. So you can see the very distinct A, B, C, three wavishness. In fact, it's a zigzag 5, 3, 5. Beautiful. And now what about the subwaves of B? Same thing. You get A, B, C. It's a flat. You can tell 3, 3, 5. And then the subwaves of E is also 5, 3, 5. Okay. And then so it's going zigzag flat, zigzag flat. And the subwaves of D is also composed of 3 subwaves for ABC. And then obviously E will be composed of 3 subwaves, just like this. A, B, C. Okay, so I think this is pretty detailed as it is. There's one more thing that I want to discuss. Let me zoom it in a little more. Remember that just because there is a symmetrical triangle, or this is a downward wedge, I am going to label this as a bullish wedge. Just because there is a wedge or a triangle, whether it's symmetrical, upward pointing, sideways pointing, laterally or downward pointing, which is bullish, does not absolutely require an E wave. That's important to understand. Pattern and area waves are not the same. They each dance to a slightly different fiddle. I've combined the two in my technique because often one allows a resolution of an impasse in analysis or a confusing status on count or indecisive status on a count. And quite often pattern can help resolve that. So what I'm saying is just because it's a triangle doesn't mean it has to have A, B, C, D, E. This can break out at the D. So if it breaks out at the D, then that'll be great. The only thing that bothers me about D breakouts, usually they are weaker, not as sustainable because they're so far away from the apex. The apex, remember, is the point where the two lines of the triangle cross. Close to the apex, more pent-up energy is built to enable a more sustainable rally. And this is going to be the E wave breakout. Okay, so what would I expect? I believe, with the reservation of that there is a D wave breakout potential, that the next projection is for an ABC subwaves of the E to progress. This top line of the downward wedge is acting as a resistance and has been once, twice, and now for the third time. The more likely pathway is towards the 0.618, which is where the E wave will reside. It may go slightly below it too as a temporary spike. And I prefer that because it's closer to the apex and it allows a more sustainable breakout. I hope you found this to be helpful. I hope truly that this does help augment your decision making process, or at the very least, enable you to get a greater awareness as to where the price is and what it might do and where it might go. Thank you and have a wonderful weekend.